Hello and welcome. Last week, investors were witness to one of the most intriguing events in contemporary financial markets. There's been great enthusiasm for the public launch of SpaceX, tons of media attention, and large profits for many early investors. With all the headlines that have been surrounding SpaceX, some market experts suggest this might just be the tip of the iceberg. From this vantage point, there may be two other traditional substantial possibilities before the year is out that might change the financial situation in the way that SpaceX already has. Please remember, all information provided here is for educational and informational purposes only. This video does not offer financial advice, investment advice, or a guarantee of future performance. Some of SpaceX's most ardent followers have been surprised by the smooth entrance of the rocket business on the public market. Many investors have been hoping for strong demand, but few imagined the extent to which buyers would chase exposure to the firm in its first days of trade. Some of this is simply a matter of basic market mechanics. Most times at the outset of an IPO, only a small fraction of all the shares are easily transferable. If the demand from investors is significantly more than the number of shares available, the scarcity creates a natural imbalance. This typically results in rapid price appreciation, especially if a company has a strong brand, a compelling story, and a loyal base of investors. But to reduce the performance of SpaceX to supply and demand would miss a far bigger story. And sellers aren't selling just because there aren't a lot of stocks. Many are investing because they believe SpaceX is uniquely important to the future global economy. The company has come to symbolize reusable rockets, satellite communications, and the broader idea of taking humans beyond our planet. You may not agree with every facet of that ambition, but it's hard to deny that SpaceX has become the gorilla in the room of commercial space transportation. One of the more interesting things about the SpaceX story is the way it solves a common objection commonly leveled against high-profile IPOs. Before the IPO, many experts claimed insiders would use the public market as a means of dumping shares on normal investors. However, once lockup periods expire, insider selling may occur, but the first market reaction suggests that investors are more concerned about long-term prospects than short-term issues. Some degree of insider selling is, of course, unavoidable. It is reasonable for employees who have spent years building the company to want to cash in some of their gains when their shares become liquid. It is hardly surprising that after 10 years or more of service to a corporation, a person would wish to diversify his financial holdings and enjoy the results of his efforts. But many insiders are likely to hold on to a lot of their shares as they still believe in the company's future. This is a difference that counts. Dilution of a small percentage of shares does not signify lack of confidence, or it may just be smart financial housekeeping. That said, volatility in the times after future share unlocks may bring some short-term concern, but will not impact the long-term investment thesis in any fundamental fashion. The long-term SpaceX story is so much more than rocket missions. Proponents of the firm claim it is providing the foundation for whole new industries. The economic potential of broadband communication based on Starlink satellites has already been established. Beyond communications, many see possible futures in orbital data centers, space-based manufacturing, geospatial intelligence networks, energy-generating systems, and next-generation transportation platforms that drastically shorten journey durations around the globe. Some of these ideas are still in the realm of speculation, but the big-picture thesis is built on one simple idea. If space-based economic activity really explodes in the next several decades, then the company that provides the transportation and infrastructure services may be in one of the most valuable positions in that ecosystem. But the case is stronger perhaps when one looks at the sheer magnitude of the capital flowing into the sector. Space technologies look to be entering a new era of growth, with enormous quantities of money and a growing interest from investors. But other investors think the largest opportunity is in not buying into shares of SpaceX directly. Rather, they refer to the wider network of suppliers, manufacturers, and infrastructure providers who would profit from increased spending across the industry. There are certain examples throughout history to support this notion. The current boom in artificial intelligence has created some of the most impressive financial returns, but those returns have come not only from firms producing AI software, but also from those supplying the infrastructure to support that development. In the first quarter, there was a large capital expenditure on building out AI infrastructure, observed in semiconductor manufacturers, networking providers, construction companies, power management organizations, and optical component suppliers. These sidelines often beat revenue expectations as spending increased. The space sector could be seeing the same trend. Companies will invest billions of dollars in launch facilities, manufacturing plants, communication networks, satellite systems, and computing infrastructure, and demand for specialized suppliers may explode. If investors can identify these beneficiaries early, they may also have the opportunity to take part in a larger industrial expansion than that of a single company. The excitement around SpaceX remains strong, but attention is shifting to what many see as the next major opportunity: Anthropic. In the past couple of years, Anthropic has emerged as one of the most powerful players in artificial intelligence. By building its Claude family of models, the company has positioned itself as a serious contender in the race to build better AI systems for consumers and corporations alike. Speculation regarding a future public offering has grown enormously. Some experts say the firm may go public in an IPO before the year is out, with a valuation perhaps in the trillions of dollars. Whether such projections are real is another thing, but the size of interest points to a big appetite for direct exposure to frontier AI enterprises. Part of the excitement is that few pure-play AI investments are available to public markets. Many of the world's leading technology companies have incorporated artificial intelligence into their offerings. But for investors wishing to purchase the leading producers of AI models directly, options are currently limited. An Anthropic IPO is a rare opportunity to invest directly in one of the industry's most recognized inventors. Meanwhile, investors are seeking alternative ways to obtain exposure ahead of big IPOs. There's a new type of publicly traded investment vehicle that has appeared recently. These entities are akin to venture capital funds, but they trade on public exchanges. Their portfolios can include stakes in private enterprises that have not yet gone public. With excitement about prospective IPOs growing, the value of these vehicles could go up as investors look for roundabout methods to invest in hot private companies. For investors unable to invest directly in private investment rounds, such vehicles can be a way to get exposure to the success of rising technology leaders. The trend has already sparked significant investor interest in getting exposure to companies such as SpaceX, Anthropic, and OpenAI ahead of their shares being available on the traditional public markets. Inevitably, the conversation turns to OpenAI, another company that would likely get phenomenal investor attention should it ever decide to go public. ChatGPT's parent company, OpenAI, has become one of the best-known technology companies in the world. Its products have put artificial intelligence into the hands of hundreds of millions of users and have been a defining influence on how the public understands the technology. According to several observers, a potential OpenAI IPO would rank among the largest and most closely watched offerings in the history of finance. But a combination of strong brand awareness, swift uptake by users, enterprise partnerships, and continued progress in AI capabilities would likely increase investor interest. In many ways, OpenAI and Anthropic have become the defining adversaries in the frontier AI space, a fight investors are eager to follow. The competition we are anticipating has one remarkable characteristic: the flow of investment funds. Some have speculated that the SpaceX IPO sucked cash out of crypto markets, especially from investors who are fans of disruptive technologies and grand long-term visions. But they believe the OpenAI and Anthropic IPOs could draw money away from big tech firms and present investments in AI. Investors who were looking for indirect exposure through large technology companies may choose to rotate into AI leaders when direct ownership opportunities are available. But even if such a rotation of capital happens, it doesn't always make established technology companies susceptible. Microsoft, Amazon, Alphabet, and Meta continue to invest billions in AI infrastructure, cloud computing, next-generation semiconductors, and data center development. Their size, resources, and technical experience give them significant competitive advantages that can foster long-term success despite short-term market instability. One of the key uncertainties lately has been whether or not OpenAI will be able to maintain its advantage and grow it. Many supporters have grown more confident with the continuous developments of ChatGPT, and there's been increased enterprise adoption and investment in infrastructure. Many believe the company is still early in tapping into its commercial potential. Any new developments that play into that narrative, based on history, might boost investor enthusiasm even further for any potential public offering. There are a lot of strong themes that will be digested in market conversations as the year progresses. Investors will be eyeing the growth of the space economy, the continued build-out of AI infrastructure, the rise of pre-IPO investment vehicles, and the possible public market debuts of Anthropic and OpenAI. The common story behind these trends is technological progress and the unleashing of large amounts of wealth in new sectors. Ultimately, the key lesson is not specific to any one business. Instead, it is the understanding that major technology shifts can provide openings for entire ecosystems. Much of the emphasis goes to the companies developing new things, but suppliers, infrastructure providers, strategic partners, and investment vehicles can all play important roles in creating value. For investors who understand these wider dynamics, this can be a fantastic moment to discover potential as new sectors grow and expand. The next several months should rank among the more interesting periods for technology investing in recent memory. Whatever it is, whether space exploration, artificial intelligence, infrastructure spending, or public market offerings, the pace of innovation is only quickening. The following chapters could be as disruptive for investors, entrepreneurs, and tech lovers as those presently sweeping the globe. Thanks for watching. If you enjoyed it, please consider subscribing to the channel and supporting future content.